Hi, my name is Ernie Burns of Burns Estate Planning Wealth Advisors.
I'm Ashley Terrell, financial advisor.
So the reason we're having this coffee chat today is a lot of individuals are worried about the markets and what's going on right now. And Burns Estate Planning Wealth Advisors have been around over 30 years. We manage a little less than $1 billion. So our viewpoints matter to some people. So we're going to give you our opinions of what's happening right now and what our expectations are in the future. And with this coffee chat today, we're going to get into some details of what happened, why it happened, in addition to what our expectations are in the future. So, Ashley, why did this happen?
So we have a string of disappointing earnings from Google, Meta, Amazon, a couple other tech stocks, and that has really made us feel this downturn here, it was a disappointment. We really had high hopes for those tech stocks. They've been giving us a good rally all year. We hope that that would continue. In addition to that, we have the Feds who did not reduce interest rates as quickly as we thought that they would. So those are the two main reasons we're having...
One more, job losses.
As well as the job report on Friday. That came out and was pretty disappointing as well.
The expectations were much lower than actually came out. And this is weekly now, so every Friday. So the next one comes out this Friday, and I think if that report comes out as expectations, then we're looking at a buying opportunity right now. We're looking at a buying opportunity. So that being the case, a lot of people don't realize, Ashley, that even though we've had some pullbacks, 10% in the Nasdaq, 5.8 in the S&P, and the Dow, 1.6, what a lot of people don't realize, for the year, the market is still up.
Exactly.
This was a small pullback. It knocked back a couple months. It did not knock back the entire year. So the only index that's in correction mode is the Nasdaq itself. But for the year, the Nasdaq is still up 11%, the S&P up 10.5%, and the Dow still up 3.3% for the year.
I think it's very important that people aren't focusing on the day-to-day performance or day-to-day loss, and that they are focusing on the long-term effects of that. We're in the market not to make a quick dollar, but we're here for solid investments. And as long as that is your priority and your goal, then we think that you're ultimately going to be okay in this moment.
And that's a good point, because a lot of times people are buying stocks random, in the sense of this. They're looking at their phones and saying, oh, this stock's up today, I'm going to buy it. You got to do research. You got to have the fundamentals. And if you don't want to do that, it's just fine. If you don't want to do all the research, then hire a financial advisor. But that's what you need to do to make sure that you're picking out the right selected. For example, the big seven, which are down right now.
I was about to say NVIDIA. A lot of people were buying NVIDIA here the last month, and that's a hard place to be right now. And of course, if you're buying NVIDIA years ago, you're in a great place still.
Yeah, over the last year, it's up 100%. So if it went down 15%, so what? Because you're still up 85%. So the quality of positions that you buy are very, very important right now. And there are some buying opportunities, but I'll wait till Friday to do it. But you could buy Apple, for example. It came out and blew out earnings. It beat estimates, and the stock's down $30 right now. There's no sense for it whatsoever. However, I would wait till Friday to see that jobs report. And in addition to these stocks are on sale, it depends on your time horizon.
Exactly. Another thing that I kind of want to bring attention to is if you're appropriately diversified, then you're not feeling this as much as others. So there are some opportunities in the market, and there are some safe places in the market. If you look at Johnson & Johnson, I think Coca-Cola was actually another one that was performing pretty good. But there are some safe stocks out there, and diversification is so important. And I think that this is a good reminder of just how important diversification is.
Yeah, like Procter & Gamble and which were Lockheed Martin, like you said. Caterpillar, that was the other one I was trying to think of. The old Stonehenge type of stocks that are going kind of recession proof in a sense. People still have to go buy groceries and have to make those products to buy those groceries, like Procter & Gamble. And the defense of the country, well, the government's never feeling anything, right? The Congress is always going to write a check, so Lockheed Martin's doing well.
Northrop Grumman.
And Northrop Grumman. And also there's positions you can buy, for example, like structured notes. When built correctly, can give you very good returns. We locked in a note 2 weeks ago at 9.2% for 24 months. That's locked in at 9.2%. And we'll have to give you details if you're interested in it. We're about to lock in another one. So there's opportunities that you can buy in this market but you got to know what to buy and when to buy it. And that's what we're good at here at Burns Estate Planning and Wealth Advisors.
So making sure that you're diversified and that you have someone on your side who is looking into the metrics of these stocks, because this is not something that you can do completely on your own. Having a financial advisor to look into that is so important.
You're right, Ashley, and everything you just said. So there are opportunities in addition to the rest of the year. This is not a crash. Crash is over 20%. I don't think it's going to result to that. I'll be proven out pretty quickly too, but I don't think it's going to result to that crash in itself. We had a correction, and it's normal to have a pullback. A lot of people don't realize that. It's normal to have a little bit of a pullback in itself each year. Even in last year when the market was very strong, and also in previous years when the market in 16, 17, 18, when the market's strong, you're going to have a pullback sometime that year. People are taking cash out, taking some returns back. You don't make money until you sell. But in addition to, there's opportunities when they do that.
And I do think that there's a lot of people panicking right now, but this is expected. We've been telling our clients all year long that we're expecting this volatility through the election. So this is something that we've been preparing for and something that hopefully you guys were preparing for. And there's no need to panic just yet because, again, this was expected.
In addition to, in the last 16 elections, actually, there's never been a negative year in the market. Now, we're not going to feed on that in the sense of, it can't happen. But that's one point. Another data point is this. Our expectations of the market, because of earnings with companies and because interest rates are going to basically start falling now, and she started to touch on that earlier, the expectations now are 3 rate cuts this year of about a point and a half. That's much larger than expectations of just a month ago. So if you remember the beginning of the year, in January, actually, they were expecting 6 rate cuts. And by the time March came around, no, it'll be by 3 rate cuts, And then over the last 4 months, it was, maybe 1 rate cut in September. Now expectations are there's going to be probably several rate cuts this year, anywhere from a point to a point and a half. And I think that first rate cut you touched on in September has jumped from 25 basis points to 50 basis points, a half a point. And it's an 86% chance of that happening, which is a plus. Now, expectations are if that happens, the feds do not control the election in a presidential year, but this year they have a lot to say so because of the factor they control what's happening in the economy with jobs and also the market in itself.
Mm-hmm. There are other developed countries such as the Bank of England. They've started cutting rates as well. So I hope that we are soon to follow. But if we do decrease rates, that is going to help the situation so much more. Our prices are going to drop. The economy is going to be doing better. So this is something absolutely hope it happens this year. And
it is. You don't have to hope it is going to happen. But the big thing about it is this, too, though, that when this starts occurring, it's great for tech stocks. Okay? It's very positive for tech stocks. So by December, and this is our expectations for the year in itself, we're going to have a positive year. No matter who's elected, okay, believe it or not, we're going to have a positive year. Doesn't matter if it's Harris or Trump. We're going to have a positive year in the market. Now, the difference could be huge in a sense of who might be elected and the expectations of their policies passed, but those policies can't go into effect till next year. So we'll see what happens there. However, our prediction and our team's prediction and our analysts' predictions for the rest of the year is going to be a positive year in the market, and when they start lowering interest rates to the caliber we don't know. This is the expectations. But if they lower interest rates a point and a half this year, tech stocks are going to have a very, very strong 2025.
And one of the things to know is with those jobs reports that have been coming out, the tech companies have not been suffering. So they have not been laying people off. Their jobs reports are indicating that they're still doing great. So
if you are looking at your portfolio and it's taking a big dip, give Burns Estate Planning and Wealth Advisors a call today. Our team can sit down with you and make selections of positions that you're currently looking at and build your retirement plan for the future. Because what's also very important right now is the tax strategies. Because of the sunset provisions are expiring December 31st next year, okay, those tax cuts are expiring. All tax rates are shooting up in each category. In each category, we focus on that. So if you want some tax strategy planning also, give us a call. All right, at 1-800-308-4416. So look us up on the web at burnsestatePlanning.com.